So if I look at the 30-year period, I'm basically repaying for a brand new house amongst that time period. Is that worth it for me in the long run? Or is that something that should be looked at from the insurance people? Is like, look, insurance is supposed to be you pay us a fee, and then if something happens, we'll take care of you. But the fee is like getting so outrageous that I'm like, why am I doing this? If I self-insure, because that's a term too we talked about in our phone call. If I self-insure, as I told you, in 10 years, I could basically almost replace the whole building. In real estate, it's never the fire, the flood, or the hurricane that costs you the most. It's the protection you didn't know you needed. Today's guest is the guy who helps you prepare before the storm hits. Welcome back to another episode of the Real Estate Roundtable. I'm your host, Lancelot Lenard, top producer with Florida Homes Realty and Mortgage, and leader of the Sir Lancelot Group. Today, we're pulling back the curtain on a topic every homeowner, investor, and business owner thinks they understand until they learn they've been underinsured the entire time. Joining us today is Brian Ford, the owner of Insurance Resources, and one of the most trusted voices in risk management, asset protection, and long-term insurance strategy. Brian helps property owners, investors, and businesses avoid costly mistakes and build bulletproof protection plans that actually match real-world risk. If you own anything from a single-family home to a multi-million-dollar portfolio, this episode might save you thousands. Let's get into it. Brian, welcome to the podcast.
Welcome. Thanks for having me.
Tell me a little bit about your background. Where does Brian come from? Tell me a little bit about your business and all that stuff.
Yeah, so I was born and raised in Treasure Island, Florida, right here in Pinellas County, near St. Pete, Tampa area. Born to two insurance agents, actually. So come from a family bloodline of insurance. Went to Florida State, graduated from their business school with a risk management and insurance degree. Then went to University of Tampa for my MBA, and then right out of there went straight into the insurance field. And about 11 years now, joined the family agency, and since that time I've been working on the whole transition from one generation to the next.
That's awesome. Was there an early client story or situation that opened your eyes to how misunderstood insurance really is?
I don't know if there's one specific story. I see those stories every single day, right? You have client upon client that doesn't understand what insurance is. And it's just a piece of the puzzle, right? Usually in a real estate transaction. And people really don't understand what it's going to do for them until they actually need it. And where we actually saw a lot of that was last year. We were here in Pinellas County, and we saw a significant number of losses after Hurricane Helene, where we saw the worst flooding that we have ever seen, really. It's really since the past 100 years. So it was a very difficult situation for a lot of our clients, but seeing where insurance is necessary and where there can be some pitfalls as well.
Awesome. How did your background and training shape the way you approach risk management differently from most agents?
So I would say that a lot of agents get into this and they have maybe a sales background first. Maybe they started off as sales at a store or sales in real estate, and then they come into insurance. I started off education first. So I actually have a risk management degree. So looking at the holistic picture is something that I do first, and it's because of my background in education there. And then I have a couple of designations that are sought after designations in the industry. And again, it's just using that education first is the way I usually win deals.
You're also known for taking a policy optimization approach. For the average homeowner or investor, what are the most common coverage gaps they don't realize they have?
So I would say one of the biggest ones that we're seeing, especially right now, is the water damage peril. So a lot of carriers, especially for older properties, and not very older properties, 20, 30 years old or older, are now limiting or sublimiting water damage coverage So what is water damage? Most people think water damage is flood, where those are really two separate perils in insurance. Water damage is something like a pipe burst or an HVAC pan leak or a water heater burst, something like that, that then leaks everywhere, causes water damage. A lot of carriers are trying to sublimit that to $10,000, where a lot of those losses exceed $30,000. So you can have some significant cost out of pocket there. Another thing that I was going to talk about a little bit is liability coverage. Most homeowners policies provide only $300,000 in coverage. Some it's a 100K cap. And in reality, with inflation, the way things are today, that's not enough. With a lot of carriers, you can look at increasing your limits, or looking at something like an umbrella policy is just something it's really necessary in today's society.
What's an umbrella policy?
So an umbrella policy is a policy that actually sits on top of all the properties that you own and all your toys that you own, and it provides excess liability. So if I have an auto policy, a motorcycle, a boat, my primary home, maybe a secondary home, rental, or other rentals, I can actually get an umbrella policy, and it will sit on top of all those policies. So it sits like an umbrella on top of them. You have to have the primary underlying limits. So a lot of times it's going to be like $300,000 for the homeowners, and then maybe $250,000 per occurrence, and a $500,000 aggregate for your auto. But as long as you meet those limits, then you can have the umbrella sit on top. You can't just get an umbrella without having those underlying limits.
Got you. So it's a good kind of additional coverage that you can get if you want to
Correct. Yeah,
manage.
it's an additional policy. And it's crazy because there is a need for that in the marketplace right now. We're actually seeing it become one of those policies that's harder and harder to get,
Oh,
right?
wow.
Rates are going up, and carriers are getting more selective, or might have higher minimum limits that you have to have. And they're also being a little bit more selective with their underwriting process nowadays.
So real estate investors always ask about insurance costs. What actually drives insurance premiums up or brings them back down?
Yeah, so where we're actually seeing happen right now is rates are actually starting to stabilize from the property insurance perspective. So when we were in 2023, we were seeing rates spiking, and a lot of it was because of litigation cost, right? There was one-way attorneys' fees, there was assignment of benefits. There were all these certain drivers that were pushing insurance costs up. We also had some tumultuous storms and some bad years of storms and bad years of litigation that followed it. And what we're seeing right now is, because of some major legislative reforms that were done, we're seeing those costs actually drive. So property rates are honestly coming back to what I would say like 2021 levels. And we're seeing more and more carriers enter the market. We saw an exodus of carriers really in 2022, 2020, 2023 timeframe, where now end of 2025, starting in 2026, we've seen, I think, about 17 carriers actually enter the market, or going to be entering the market. And those are going to help to drive down costs, where but you're also seeing at the same point in time, you're seeing flood costs go up. So flood insurance rates are continuing to increase, not as significantly. We're still seeing about 15% rate increases for a lot of people, especially on old subsidized policies.
That makes a lot of sense. And I think it's great that we have competition coming in because we needed
Mm-hmm.
it really
Yeah,
bad.
we were in a place where there was no competition whatsoever, and that's
Yeah,
where you actually saw
citizens is
prices
the only
rise.
thing, only avenue for a lot of people, and that's crazy when you have basically your state insuring your house. No,
Correct. Yeah, yeah. You what you saw as Citizens, which is our state-run insurer, they were at like almost 1.5 million policies in total, and they were the top carrier out there. Again, now the state, there was some questions about the state putting all that risk on themselves, right? What happens if we do have a couple major storms, which that's not good for them, and then does the government have to come in and bail out the state if something like that happens? But since that time, that was in like early, like middle of late 2023, we're at like that $1.5 million or 1.5 million policy count. We've actually seen significant decreases since that time.
I'm a little
And
bummed out because I had a good policy with them, and now they sold it, or there was a person that actually could insure my fourplex now, and my policy went up by $1,000, and I'm like, are you kidding me?
yeah,
It's crazy.
so what that's called depopulation. So that's one of the big things that the state enacted And essentially what it does is that if you have Citizens, which is the insurer of last resort, which is the state-run insurer, they can actually depopulate you to another private market company. That private market company has to come within 20% of what your Citizens expected premium is going to be, and then they can you over. Unfortunately, there's not a lot of options, right? So you might have 4 carrier options. You have to pick one of those. But if you're like, hey, I don't want my premium to increase, you don't have an option, right? You have to take that assumption. You have to take that depopulation. Now, of course, you can always shop your coverage, try to go to other private market companies that maybe Citizens doesn't have access to through the depopulation. But yeah, it's one of those things where we are definitely seeing some consumers being a little bit upset with the process.
It's horrible and weird because I have a fourplex, okay? It hasn't flooded during the 2 major hurricanes that came through our area. I haven't had any claims on it. I owned it for about 7 years now. And it went from when we started in 2018 from $2,000 with the flood and everything included to about $7,000 right now. And
Right.
it's just insane. And I've never had a claim on it, never done it. I redid the roof, pulled some new electrical in to update the wiring. They told me you need to update your plumbing too. And I'm like, if I'm going to spend $30,000 on updating my plumbing as well, are you kidding me? What's going to be my insurance? Is it going to go down by $1,000? How long will it take me to recoup that investment? And that's what I'm seeing is that if I spend my 7 grand a year on the insurance cost, in basically 10 years, I can re-roof, re-plumb, re-electric, redo all the kitchens, redo all the floors in the whole building in a 10-year period. Isn't that insane?
It's definitely crazy. And like I said, insurance costs have definitely spiked on where you've seen flood insurance rates. They've continued about a 15% increase per year.
Oh, yeah.
So you're seeing that steady rise where property rates were going like this and now they've stabilized, right? But
Yeah.
they're still way higher than where they are. So you're still seeing these rates increase. So yeah, it's definitely difficult for investors. And there's things that you're doing like updating the electrical that might help from like a qualification standpoint, but it's not going to lead to lower rates really. Where you're really going to see significant rate reduction is potentially like wind mitigation savings. So something like hurricane straps where you had toenails before, or impact rated windows and doors where you had regulars,
It's a flat roof.
regular windows before.
So unless I put a pitch roof on it, that's not going to change. It's been there since 1954. Okay. And we applied this commercial grade roofing on it for $26,000 about three years ago. It had a California roof on it with pebbles and stuff. Got removed, and we put the new awesome roofing on it. We eliminated a bunch of the old chimneys it had because it was oil heated at one point. Now it's heated by electrical mini splits. And I'm still like, this is mind boggling how expensive it. And it's in an AE flood zone. Everything flooded around it. It did not flood. And I'm like, I keep my original flood insurance was $900. I think I'm paying $1,800. So it doubled.
Yep.
In the
Yeah,
same.
but I said you had that 15%
Yeah.
increase year after year after year after year, and it's going to continue to go up until they meet what they consider the full actuarial rates.
And a general liability or whatever, it's not general liability, like the fire hazard, wind, blah, 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 all
Your
that.
dwelling fire policy, most likely.
Exactly. That went from, I think it was $1,600 to start with to over $5,000.
Mm-hmm.
And it jumped from 1 year. We had it at $2,000 1 year, and then it jumped to 4,600. And I'm like, it doubled. And I'm like,
It was right. I'm sure it was right around that 2022 time
when the hurricanes came. Yeah.
Well, with the storms, and then you had all this. It was all the litigation problems that we had in the state.
Yeah.
They were all just snowballing. You had all these problems. You had increased reinsurance costs. You had inflation. You had increased litigation. You had the storms. All of it just snowballed. And like I said, it took down. I think there was a few. I mean, there was like about 9 carriers that went bankrupt. It's going to be a little bit less than that, but we had a bunch of carriers that went bankrupt or just decided to bail out of the state. And in the carriers that remained in the state that were still writing, they got really tight on underwriting guidelines. So maybe before they were writing anything that was 1900 or newer, now they're writing anything that's 20 years or newer. Gotcha. And so when that happens, you're going to have a marketplace that's not stable. And less carriers means less and less competition, which means your premium goes from $1,500 to $4,000.
But is this fair to the homeowner? This is a solid block building. There's no drywall in it. Okay. The only things that can get destroyed are maybe the kitchen cabinets, and the tubs are metal steel tubs basically in there. And then we have tile and LVP flooring. So everything is basically waterproofed. It can't get blown away because it's a block building. It's been since the World Wars, after the World Wars. It was built probably because of the bunkers and everything after the World War. It was somewhere around there. So I'm like, dude, you can't destroy this unless a tree falls on it. Like a 1,000,000-ton tree smushes it. There's no other way of destroying it. So water can't really destroy anything. And I'm like, and I'm still paying these high insurance costs like it would be a new build. When you look at a new build, you got 4 walls and then everything else is wood and drywall on the inside. So when you get a little water damage or you get a little flood, you're changing out almost all your drywall up to 4 feet. So you're spending a lot of money on, or maybe even wood replacement if you don't catch it on time to air it out and dry it out, like mitigation style. It's a lot more costlier than my block building. Even the walls on the inside are block.
Well, I think the issue that you run into is that it's hard to distinguish one block building versus another block building, right? And so when insurance companies compute prices, they look at, there's certain characteristics they look at.
Okay.
Where's your location? What's your distance to coast? What type of construction you are? How old your home is? What are your mitigation factors? And then they look at the person as well, right? Do they have a history of claims? Because that determines eligibility and pricing. And all those factors go in there. But it doesn't matter what type of, like I said, they looked at age and type of block, but they don't really care about anything else, right? Like it doesn't matter. And so what the insurance company has to do is they have to price on worst case scenario, right? If the bomb does happen or if the place burns, right? What are we going to have to replace it for? And so what they're doing is insuring it for max potential loss. It's one of those things that I have that all the time. And then people are like, this house has never had any sort of loss. And I go, it doesn't matter. It really doesn't. If it did have a prior loss, it's going to hurt you worse. But all that matters is what it's going to cost that carrier if they ever did have a situation happen. And I can't tell you how many times we had people say, I'm sitting out here, I'm in Pinellas County, St. Pete area. And I can't tell you how many times the time it was 10 years, people telling me it's never flooded here. It's never flooded here before. We were protected by the Indian gods, etc. And then all of a sudden, September 26, 2024 happens, and people have 3 to 4 feet of salt water inside of their houses. And now you're seeing that real estate market is definitely going through a transition period right now. You're seeing, if you look at down some of these streets, it's house knocked down, house being elevated, actually lifted, or person that's replacing their house, or just a vacant lot. And the real estate market has definitely gone through some swings here in the past year, but it's all because of that one storm, right? That one event that nobody thought was ever going to happen. And unfortunately, insurance has to price for it, because I can guarantee you there were a lot of $250,000 checks that went out last year because of these homes that were, like I said, you had 4 feet of water in them.
I get it, man. It's just, I always have this mindset: you pay and nothing really happens to you, and you're sitting around. I'm like, I keep paying these fees. I know I like to be insured. I know I like to have the comfort of knowing that if something happens, I will be made good on that end. But when does it end? Like, how much can you pay in? Because if I pay in the price of the house in the 30-year period, because I'm almost paying the same amount as a mortgage in insurance cost. And I'm like, God, if I'm paying almost the same amount as, not, let's say, the whole mortgage principal and interest, but as much as I'm paying in principal, I'm definitely paying in insurance costs. So if I look at the 30-year period, I'm basically repaying for a brand new house amongst that time period. Is that worth it for me in the long run? Or is that something that should be looked at from the insurance people? Is like, look, insurance is supposed to be, you pay us a fee, and then if something happens, we'll take care of you. But the fee is like getting so outrageous that I'm like, sure, why am I doing this? If I self-insure, because that's a term too we talked about in our phone call. If I self-insure, as I told you, in 10 years, I could basically almost replace the whole building.
Yeah, and your self-insurance costs, you don't even have to fully self-insure. Where we're seeing a lot of people, and again, I don't think this is a great idea being an insurance agent,
Yeah.
but what you're seeing a lot of people do is decide to self-insure for wind and for flood because those are our major drivers for cost in Florida. So you talked about having a $5,000 premium.
Yeah.
I would bet that your cost would probably be $1,000 if you were to waive out the wind and the flood, right? Now, again, when Helene happens or Milton happens or Irma happens, you're SOL. But if you have a fire, you're covered. If you have water damage, you're covered unless there's a sublimit cap there. If you have a liability incident, you're covered. Vandalism, you're covered. Any of those things, you're covered. It's just when the wind blows and when the waters rise, you're not covered. So we're definitely seeing that. And we were seeing a lot of that. I feel like now we're starting to see less of it than we did a couple of years ago. But when insurance costs, especially on the commercial side of things, we were seeing, we were talking about more like the residential side, but when you saw commercial property premiums go from 10,000 to 40,000, we saw a lot of people decide, okay, listen, this is silly, right? We're not going to do this. We're not going to spend this, plus have a really high deductible, right? Because whenever you have a wind loss, typically in Florida, there's a percentage deductible and it's tied to the value of the building. So you had a lot of people that decided to, like I said, go get that hazard policy. And when I say hazard, it's fire, lightning, aircraft riot, explosion, water damage, stuff like that. Yeah, but not wind and flood.
Yeah, got you. And so wind would be if the wind blows and knocks over a tree and it falls on my building, that's a wind.
Correct. Yes. So yeah, that's a big thing. People are like, "Am I covered if the tree falls on top?" Yes, that's wind because it's always what was the direct cause of loss. The direct cause of loss was wind, and the wind blew the tree, and the tree fell on top of the roof. That's the only way you're going to get coverage. And then all of that ensuing water that's going to come in there because it's a storm that's going over you, that's going to still be tied back to the wind loss.
Got you, got you. So if someone listening wants to make sure their policy is truly protecting them, what are the first three things they should check?
First thing I would definitely say is your limit of insurance, right? So your actual dwelling limit. So one of the things that we've seen over the past few years is inflation, right? Obviously, everybody has seen inflation when it comes to cost of your McDonald's meal or cost of your Chili's meal or whatever it might be. But a lot of those dwelling limits have stayed the same. And unfortunately, dwelling cost of construction, as you're well aware, have gone up significantly. So definitely checking that out. Again, checking out that water damage sublimit, seeing if your policy does have a lot of policies just automatically got moved over. So once they hit that, call it 30-year mark, they just moved over to having a water limit cap. And now that the market's getting, unfortunately, what happens with insurance, it's we had this happen when sinkhole happened, and then we had this happen when all the water damage abuse was going on. What happens is we see Swiss cheese insurance, right? And insurance companies don't usually go back and fix the Swiss cheese. It's just left with holes in it. So although the market's getting better, we're not seeing carriers come back and offer full water again, right? They might be offering higher sublimits, but they're not coming back and offering that higher coverage. And then again, checking your liability. A lot of people moved to Citizens when all of this was happening. And one of the problems with Citizens is that they cap liability at $100,000. So we might have had somebody that had a homeowners policy with $500,000 in liability, and they got non-renewed and they decided to go to Citizens. And they got Citizens, but they own, and it was cheaper than where they were at before, but they only had $100,000 in liability. And now maybe they're depopulated, they're with a new carrier, and they still only have $100,000 in liability. And again, $100,000 today's day and age, somebody gets injured on your property, it's not that much money. We're seeing jury verdicts that are nuclear. It's just something that you got to look at.
Got you. What's the difference between being insured and being protected?
I think that's a mindset, right? Being insured is it's a checkbox, right? Being insured is making sure that your lender has insurance. And do you have homeowners? Yes. Does it at the value have replacement costs on the building? Yes. Check. That's being insured, right? Where being protected is actually making sure that all of your concerns are actually covered. Lender doesn't care about your contents, but if you want to cover your contents, you got to do that personally, right? Lender doesn't care about your auto. Your home lender doesn't care about your auto. Your auto's inside your house. If you don't have a loan on that, you got to care about your auto, right? So I think it's a mindset. It's also, you got to make sure that you are protected personally, and you got to find an agent that is able to guide you through the process, discuss what you do have, and discuss ways to protect everything that does concern you. Because I feel it's one of those things that every single person has a different concern about what they're concerned about, right? For one person, it might be their car. For another person, it might be their contents. For one person, it might be their jewelry. And insurance, basic insurance, is not going to cover something like a $20,000 engagement ring or something like that. You have to have separate standalone insurance for that if you want to properly protect it.
Got you. For new investors building a rental portfolio, what's your recommended insurance game plan?
Insurance game plan is to find somebody that they can value, that can be an advisor going forward, right? So, when you're looking to buy properties, you want to find somebody that, I've seen this happen so many times where investors have 3 properties insured with one agent, 4 properties insured with another, and then some of them have liability, some of them don't. Find one agent, right? Find an advisor that can guide you through the process, because picking one agent because he was $300 cheaper on this policy and the other agent because he was $200 cheaper on that one, it's not going to serve you well at the end of the day. Most agencies have most of the same carriers, so it's just how we're doing it. So yeah, I think the biggest thing is finding the agent that you have value in.
Are there any specific endorsements or add-ons you consider must have in the following years?
Trying to think. Again, I think the biggest thing is just seeing where the insurance market starts taking away coverage. And we're starting, like I said, I talked to you about the water damage. If you're talking about personal injury is one of those things. That's the libel or slander type coverage. Water backup has always been stripped away from policies, getting that on there. Again, one of the things that we're also seeing is when everything got bad with insurance, rates were going up. We saw a lot of carriers start to go to a stated value or depreciated roof settlement loss. And having replacement costs on the roof is very valuable, especially if you ever do have a loss, because if you have a 10-year-old shingle roof, most carriers are going to say it's probably at the end of its useful life. If I have replacement costs, I'm going to get the coverage for a brand new roof. If I have a depreciated value, I'm not going to get that. I'm going to get pennies on the dollar when it comes to that. Any sort of actual cash value endorsement, be wary of. And then if I'm an investor, especially if I'm talking more residential to commercial, one of the things we're starting to see in the commercial space is a lot of carriers are adding on assault and battery exclusions. So what that means is that if somebody gets beat up on your property, right? So I've heard of incidents where apartment owner owns an apartment and ex-boyfriend goes to the apartment, his ex-girlfriend's there, she's with a new man, he goes in there and starts beating, the crap out of the guy. Lawsuit happens, come back, they sue the apartment owner. He has an assault and battery sublimit or exclusion on his policy. He's got no coverage. He's self-insured for that. So assault and battery is getting one of those things that's really big, especially on landlord policy, especially on the habitational space. And then abuse and molestation, again, going there, limitation on coverage for designated premises. We're seeing a ton of more exclusions in that commercial space, especially, like I said, from the apartment owner standpoint. That market's definitely going through a little bit of changes, right? Where we're seeing rates continue to increase and coverage is getting stripped from policies. They're still providing the slip and fall coverage, but it's for those other things that, unless you read the exclusions of the policy, you're really not going to understand.
Wow. That is definitely eye-opening. Think about it. You don't want to get into one of those troubles. Because this is one of my personal opinions, and this doesn't apply to the insurance coverages here. But where I come from, if you get into a fight with someone, you deal with it with that someone. You don't sue a landlord because you got into that is insanity when people do
We are a very litigious society, right?
Isn't that insane? Oh, we're going to sue the landlord because we got into a fist fight. I'm like, come on. What does a landlord have to do with your fist fight?
And the reason being is because they have liability insurance. That's real. That's at the end of the day, you're always going to try to go after the pot of money, right? So they see the pot of money there. And unfortunately, these carriers have paid out a couple times. So, they're setting a precedent for these claims to happen. So now what you're seeing is like the space, like I said, they're starting to strip down policies. And again, you're starting to make what used to be robust insurance, Swiss cheese insurance, where it's still providing what it really was meant for, which was the slip and fall stuff.
Yeah.
It's just some of these other things that you're seeing are being limited.
Here is the exact reason why rental rates are going up as well. Because think about it, all these people, it only has to happen once to a landlord and then be like, okay, now I have to get extra coverage. Now I'm bumping rents on everybody. So just a few bad actors can ruin the whole life of a lot of other people because it's going to cost the landlord a lot more money. So now the landlord has to accommodate for that loss. And here we go. So I got a phone call the other day, and on one of the rentals that we're having up for rent, and she was like, "How much is it?" So $1,350. It's a 1-bedroom. Oh, they should put rent blocks on housing in Florida. I said, if they would do that, you would see a lot less rentals out there because people would leave. They would just try to sell and move out of the state because if you put the caps on it, and then you have two bad actors on a property getting into a fist fight and suing the landlord, and the landlord's it's not worth it for me to be a landlord anymore because they're going to take my pants away from me too at the end of the day.
Yeah.
Even as many times as it happens way more often that you go and get a property back from a tenant that didn't pay rent or something, and then there's holes in the walls, there's broken cabinet doors, there's missing this, missing that, and you're like, now that security deposit that they left there for $1,300 doesn't even cover a phone call to your contractor to go and fix the things. You get what I'm saying?
Exactly. Yeah, rates have gone up significantly, right? Yeah, and when you think about this from being an apartment owner, you have those costs going up, just your basic maintenance costs, everything is more expensive.
Taxes. Insurance.
You're servicing on your pool, your cleaning cost, all that stuff has gone up dramatically. We've already talked about insurance. It's gone up dramatically. Yeah, it's becoming harder and harder to be a landlord here, right?
Yeah, soon you could just declare a nonprofit, not-for-profit. Hey, by the way, I'm just holding this property to have tenants sit in there.
Exactly, and that's where I'm obviously more of a let the market dictate what the rents need to be, and they will. But if you start putting rate caps on people, you will. You're going to see buildings sell, and they're going to sit there
empty, vacant. It costs less having it vacant than to put tenants in there at some point. And that's when it was that's what happened in California. And that's why they have probably a housing crisis because more and more regulations, more and more this and that. And people are like, it's not worth it to rent here because I can't even put a tenant out for a year because, of regulations. Yeah. And that's when it becomes, okay, is it worth it to be a landlord here? It's not. So
it's becoming harder and harder.
Yeah. And then you have a housing crisis on your hands.
Mm-hmm.
Yeah. So where do you see the insurance industry evolving over the next few years, and how should property owners prepare?
So I think that obviously if you're talking about what's evolving, everybody's going to lead into the AI situation, right? I think AI is definitely, we're seeing just touches of it right now in insurance, but I think that AI is going to continue to have a significant presence here. They just announced that AI can't deny your insurance claim, but I guarantee it's going to be used in making those denials, right? Maybe there's somebody's going to have to oversee it, but I think you're going to continue to see it be used a lot in underwriting. We're already starting to see it where, okay, this house is a straight up decline for us because the roof doesn't look good. But the problem is that the technology a lot of times is not there yet, but I feel like it's going to be.
But it can also help.
Oh, 100%.
More detailed analysis of each property to get a more personalized coverage per property, which in my case would help.
It could potentially, possibly, unless the AI, and this is where before, especially when it came into the commercial space, not really in the residential space because rates are so regulated and it is what it is with rates. But in the commercial space, there's room for negotiation where I try to go out and I try to make a risk look better than it really is because I'm trying to write the business. And those carriers are going to give me a price based upon the way that I present it to them. And where I think where AI is going to have it is they're going to say, no, we can't offer the price under this particular cost because of these particular reasons, because of these, whatever we're getting from AI. So I think that it's going to help. It's definitely going to make speed to market be a lot faster, right? From before, if you were to come to me and say, hey, I need to quote this risk, maybe it's commercial. Commercial might take us 3 to 5 days, maybe a little bit longer. Residential is usually going to take us at fastest a few hours, at longest a day or two, right? Depends on the client history. There's whether or not a lot of claims or the property has some problems on it. I think all that's going to speed up, right? From the time where somebody contacts an agent to the time where quotes presented to the time where it's written is going to be expedited significantly over the next 2 to 3 years, which I think that does benefit some people, but I think that also sometimes you're moving so fast that you forget to ask questions, you forget to see what's actually you're covered for. And I think that's going to have some negative impacts because unfortunately insurance companies are greedy, and I work for them, but I'm not part of an actual insurance company. I'm part of an insurance agent. I sell the product, right? And our job is to try to tell you what's the good and the bad thing about the particular carriers that you're going with. I think that you're going to see some things that are probably going to be slidden in there that are be fast, easy to hide things because of the fact that we're seeing this go so fast, right? And if I can go use agentic AI to go online and purchase insurance, what am I actually purchasing? Who knows what I'm actually purchasing? And obviously you can ask the questions to the AI and ask all those types of things. But I think that we're definitely going to see some potential concerns when it comes to what carriers are offering through these agentic AI type platforms.
Got you. And Brian, for anyone listening who wants you to review their policy, optimize coverage, or simply get a second opinion, what's the best way to reach you?
Email is probably the best way to contact me. I'm on there, slave to my email box every day, like we all are. It's bforward@insuranceresources.com, or you can always contact our agency, which is 727-345-0242.
And then insuranceresourcellc.com?
Insurance Resources LLC, that's the old domain, but yeah, insuranceresources.com or insuranceresourcesllc.com, they both go back to our website. You can check us out there. Again, yeah, we're based here in the St. Pete area.
And it will be in the show notes underneath. Today's episode was a reminder that real estate isn't just about acquiring assets, it's about protecting them. And with the right advisor, you don't just insure your property, you secure your future. A huge thank you to Brian Ford for sharing his insights and helping us understand how proper risk management can save homeowners, investors, and businesses from major financial setbacks. If you found value in today's episode, don't forget to subscribe and share this episode of the Real Estate Roundtable. And if you need expert guidance in the Florida market, you already know where to find me, Lancelot Lenard with Florida Homes Realty Mortgage. Until next time, stay smart, stay protected, and keep building your real estate legacy. Thank you, everybody.
Appreciate it, Lancelot.
Thank you for joining us on Sir Lancelot's Real Estate Roundtable, where we've unveiled the mysteries of real estate together. Remember, in this kingdom of possibilities, every dream home is just a discussion away. I can help your real estate dreams come true. Just call me at 786-449-7518. Until our next roundtable, may your ventures be prosperous and your homes be filled with love and joy. Farewell, fellow knights of real estate.